The Nifty, India's benchmark stock market index, has been on a roller coaster ride recently. After reaching record highs, the index has experienced a sharp correction. This decline has investors worried. They are wondering about the reasons behind this sudden shift in market sentiment. Several factors have contributed to the Nifty's recent downturn. Global cues have been weak, with major international markets also experiencing volatility. However, geopolitical tensions, particularly in the Middle East, have played a significant role in shaking investor confidence. The conflict between Israel and Palestine has sent ripples of uncertainty across the globe. India, being a major importer of oil, is particularly vulnerable to disruptions in the Middle East. The surge in oil prices due to these tensions has added to the worries of investors. The Middle East has always been a region of geopolitical complexities. The recent escalation of violence between Israel and Hamas has injected a new wave of uncertainty into the global landscape. This uncertainty has a direct impact on investor sentiment and market behavior. Investors are wary of the potential for the conflict to escalate further. A wider regional conflict could have severe consequences for global trade, oil supply, and economic stability. This fear has prompted investors to adopt a risk-off approach, leading to a sell-off in equity markets worldwide. The situation is further complicated by the potential involvement of other regional and global powers. Iran's role in particular is being closely watched. Any signs of the conflict drawing in larger players could further escalate tensions and send shockwaves through global markets. Even before the recent geopolitical turmoil, concerns were brewing about the Nifty's valuation. The index had been on a remarkable bull run, and some analysts felt that this had led to a disconnect between market prices and underlying fundamentals. The price-to-earnings, or PE ratio, a common valuation metric, had risen significantly for the Nifty. This indicated that investors were willing to pay a premium for Indian stocks. While this optimism was partly fueled by India's strong economic growth prospects, some experts cautioned against excessive exuberance. The recent correction can be seen as a reality check for the market. As uncertainty mounts, investors are re-evaluating their growth expectations and discounting future earnings at a higher rate. This has resulted in a contraction in valuations, bringing them closer to their long-term averages. Section 4. Earnings season, a mixed bag for Q2 FY25. Adding to the mix is the ongoing earnings season for the second quarter of fiscal year 2025. Corporate earnings reports are closely watched by investors as they provide insights into the financial health of companies and the overall economy. So far, the earnings season has presented a mixed bag. While some sectors have reported robust growth, others have disappointed. Factors like rising input costs, supply chain disruptions, and weaker global demand have weighed on the profitability of certain industries. Analysts are now closely watching the guidance provided by companies for the rest of the fiscal year. Their outlook will provide crucial clues about the sustainability of earnings growth and the potential impact of the current geopolitical and macroeconomic headwinds. Section 5. Technical support zones, seeking a floor for the Nifty. From a technical analysis perspective, the Nifty's recent decline has pushed the index towards crucial support levels. Technical analysts study historical price patterns and trading volumes to identify potential areas of support and resistance. These support zones are price levels, where buying interest is expected to emerge, potentially halting or slowing down the downward momentum. A break below these levels, however, could signal further weakness and trigger another round of selling. Traders and investors are closely watching these technical levels for clues about the Nifty's near-term direction. A bounce back from these support zones could indicate that the market is finding its footing, while a decisive break below could suggest further downside risks. Section 6. A balanced outlook, navigating the road ahead. The combination of geopolitical tensions, valuation concerns, and mixed earnings has created a complex and uncertain environment for investors. Looking ahead, the Nifty's trajectory will depend on a multitude of factors, both domestic and global. The resolution of the Israel-Palestine conflict, or at least a de-escalation of violence, would be a major positive for global markets, including the Nifty. However, the path to peace remains uncertain. and investors will remain on edge until a lasting solution is in sight. On the domestic front, the Indian economy's resilience, corporate earnings growth, and government policies will play a crucial role in shaping market sentiment. While challenges remain, India's long-term growth story remains intact, offering hope for a market recovery. In such a fluid environment, it is essential for investors to maintain a balanced outlook. Rather than panicking, investors should focus on building well-diversified portfolios that align with their risk tolerance and long-term investment goals. Staying informed, seeking professional advice, and avoiding impulsive decisions will be key to navigating the road ahead.